This is another episode of the Masters of Beautiful Achievements. What can we learn from them on how they apply natural science, systems thinking, and personal leadership to realize these beautiful achievements? My name is Alexander Princeton, and great you are listening to this episode. If you're looking for more inspiring episodes, check out my website, mastersofbeautifullachievements.com. The link can be found here below. These conversations are made possible by our Patreon and Gumtree community, so I want to thank each of you for your monthly or even your one-time support. Your contributions enables me to create these amazing conversations, so thank you for your support. When you're not a member yet, click on the links below to join and be part of this amazing community. If you're interested in how I can help your business create beautiful achievements, choose one of my Gumtree offers on how you want to engage with me, or contact me directly via Scope Matters website. And now, it is time to enjoy the conversation with today's masters. Climate change was something we were talking about, and climate risks. And the topic seems to be less systemic. In a way, when you look at it from where it originates from, and you mentioned that the banking and finance does it completely upside down.
Yeah, I think what you refer to is that when you think about the topic of climate change in the banking industry currently, we are talking about, we start with climate change and then we branch out to other environmental risks. So I think most banks and most jurisdictions, so where the various supervisors are working on, have some guidance in place in terms of climate. And even the guidelines of the ECB, the European Central Bank, they have the guidelines of climate and environmental risks. So it starts with climate, and then we have other environmental risks as biodiversity loss, for example, as the most prominent one. And we were talking about that you say actually it starts with biodiversity, and then climate is one of the outcomes of that. Yeah. But we as bankers and we in the banking and financial services industry are, I don't think we believe it, but we are conditioned. Yeah. Because we started with climate, we think that everything starts with climate. And now we are slowly adding other environmental risks like biodiversity loss, which is the most prominent one at the moment. But I think it kind of ingrained in our mind that it starts with climate. And why did we start with climate? Well, because it's one of the easiest ones to understand conceptually, I think. And it has a very nice metric, greenhouse gas or CO2 emissions. So we can actually measure something, and we really like to measure things. And then if you measure something, you can say, okay, this is the current baseline and I want to get it to zero, so you can build a transition plan. And then you can create a net zero plan for 2030 or 2050, depending on your ambitions. And it's really neat and clean and measurable, and you can put a KPI on it, and we love that. And now we are moving into other topics like biodiversity loss, and then it's conceptually very difficult to understand for people. And so sometimes it's, if certain species become more prominent, that's a bad thing. Sometimes when they are gone, it's a bad thing. Sometimes both. So you have invasive species, but you also have species loss. And what do I measure? Like what can I do in my... we love dashboarding, so what do I put in my dashboard?
So today I have Henk Jelle Reitsma, partner, manager, and founder.
Yes. Of
RiskSphere. And as you have heard already, we're going to talk about climate change, climate risk management. RiskSphere is putting itself into the market as sustainable risk consulting. Something I'm going to talk and let Henk Jelle explain actually what that is. So welcome to the podcast, Henk Jelle.
Glad to be here.
For the listeners, could you just give a short background what RiskSphere is and in what areas you operate, so that we have an idea and a little bit about your background?
Shall I start with my own background or my company?
Let's start with your own background.
Okay.
And then the reason why you founded RiskSphere? Maybe that's also
Yeah.
a good one.
Yeah, so I came to this whole theme of sustainability a bit from a strange background, and namely hardcore risk management. And I came to risk management also in a bit of a strange background because I'm not a banker originally. I didn't study economics or banking and finance. I'm a neuropsychologist originally by training, but I also studied user system interaction at the University of Eindhoven, so technical university, and I studied management at Nyenrode.
Yeah.
So I had a triple academic background, and then I started a traineeship at Rabobank, which was by coincidence, basically. I've never thought about a bank before in my life.
But it was a job offer that just passed along.
I had a couple of options that, and there was a consultancy firm and one or two traineeships, and one of my the traineeship turned out to be at Rabobank, and I thought, well, you know what, a bank is a really nice starting point for a career. I learn what I want to learn, and then I move on to something else, and I never quite moved on because I really, really liked it. I think I had never thought about a bank being such a complex organism almost, and the whole function it has in the economy, in the real economy, but also in the economy it creates itself, like the financial sector, like the money shaping and the asset management and like the derivatives, and like I thought it. Maybe because I was not from that background, like from a study background, I thought it was a really intriguing environment.
So basically you came as an outsider.
I totally, yeah. So I was a total outsider, came to a traineeship at Rabobank, which was also, by the way, not a risk traineeship. So it could have been anything. So it was a general management traineeship, so I sometimes jokingly said that if my first assignment would have been at the marketing department, I would probably be at Unilever now. But the first thing I did was just before I started my traineeship, I got a call that I had an assignment at the risk department. I thought, well, that's fun because I don't know anything about risk. And then, but it also like I would like to be that there was more personal leadership behind it, but I'm a bit of a, also I think it says something about me in general that I really like to kind of go with the flow. So I went with that flow as well. My second assignment was also within risk. Third assignment was slightly different, but also within the risk and finance department. Fourth assignment was also at risk, and then suddenly you're an expert because after 2 years you're a junior consultant kind of type. Moved to PwC as a consultant, worked for 10 years in consulting at PwC, a smaller company, a bigger company. So I moved around with firms a couple of times.
And everything was risk management related?
I think 80% risk, 20% all over the place.
Yeah.
And 80% banking, insurance, and 20% all over the place.
And that was traditional risk management?
And what do you mean by traditional risk management?
Not the climate risk
No,
management.
just regulatory.
Yeah, regulatory.
Yeah. So I think what really attracts me to the topic is that because of its regulatory character. So I really like the fact that in Frankfurt or in Paris or in somebody puts words on a paper.
Yeah. And
then it changes the strategy or the operations or the process or the tool within banks. And somewhere this translation from word into action is something that really intrigues me and still intrigues me after 20 years. But it used to be like capital requirements, modeling, risk models. So really what you call traditional risk. In around 27. So I was a consultant for 10 years, then moved to one of my biggest clients, a bank, was head of various departments, all in the risk domain. And in that period, around 2008, 2018, 19, so just before the pandemic, the ECB, so the European Central Bank, really ramped up its efforts on climate. We did the first climate stress test, and I was head of the stress testing department at that point. So I conducted that. Actually, we did one the year before because we already thought about that was a topic we wanted to explore a little bit more. So we were slightly ahead of the curve. There were questionnaires coming up, self-assessments, and I was involved in almost everything that I could get my hands on because I thought this is one of the bigger topics of the next 10 years. Regulatory-wise, this is just the beginning of the beginning, and maybe even the beginning of that. Like, this is going to be huge. And I want to be part of it. I think it's intriguing. I think it's intellectually challenging. We got self-assessments with questions, and I thought, well, these are not the questions that you should ask. So I'm
That's
like,
interesting.
it's not even that nobody has the answers, but we don't even have the right questions yet.
Interesting.
So I thought it was an interesting topic. So when I moved back I found out two things when working at the bank. First of all, I think I'm a pretty good manager. Second, I'm more a consultant. So I really like the diversity, the openness, the challenges. Like, I'm not really a business as usual manager. I like to do things business as unusual, to put it like that. So I moved away from the bank, and then I thought, well, if I'm going to start my own firm because I don't want to go back to a big corporate consulting company. And if I had my say, and I have, because I can do whatever I want with my life, I would like to have it on that kind of intersection of my classic line of business, risk, regulatory, and this new dimension that came up, climate, sustainability, ESG, which are all different topics, I know, but for the sake of the argument, that's an axis and risk is an axis, and I'm going to put a company on the intersection of those two axes. And I'm going to call it sustainability risk consulting because it's sustainability and it's risk and it's consulting. I'm going to call a company.
And why? And what's the annotation of RiskSphere?
You will be surprised how difficult it is to find a name for a company that does not exist. So I think I had a couple of names that I thought were fun. So I didn't want to call it Reitsma and Partners, and I didn't want to call it whatever. And then I had a very cool name. And then it was shredded by my colleagues. Like, we don't understand anything about it. So every time I had a name, it was either shredded by everybody around me, or if they were enthusiastic, it already existed. So at some point I was WhatsApping with a friend of mine, and he suggested maybe you should do something with the world or the globe, and then I was thinking like synonyms of the word globe, world, sphere. I like the word sphere. I'm getting better at pronouncing it after a couple of years of owning this company. It is a really difficult word to pronounce. So it's really cool. It's actually a pretty cool word. It's
the risk space, but then definitely
space, but also the globe of the world, and I really liked it. And then I was, it's a fun fact, I was waiting on a Saturday morning when I really discovered the name. Like, this could be something like put together, and I checked the KVK, like the Chamber of Commerce, and I checked online, and like it didn't exist. So I was so happy that I immediately blocked all the accounts.
So very smart, yeah.
We have so one of my partners here, I was apping her like, it doesn't exist yet. I think this is it. And she said, well, I'm not sure. I want to think about it, but we blocked all the accounts. Like we this could be it.
Yeah, all the domains. Yeah,
all the domains. That's the word I was looking for. So and then we found it. And then at some point, it's also every name is as good as any, but it worked.
No, you have to find a name that is catchy, has the soul of what you do.
Yeah.
And you're working in risk management, so
Risk should be in there.
Yeah.
And then something ambiguous that could be climate. But to be honest, I could still at some point in time, if we, I'm not going to do it, but if I would change the total trajectory of the company, I could still keep the name, because it's not Risk Climate Innovators or something like that. So.
And are you innovating in risk climate management?
Ooh,
climate
that's
risk management. For the listener, just to go back, climate risk management is a new thing. If those are on the regulatory spectrum, know ESG, CSRD, GRI, and I think there are many more types of regulatory compliance reporting tools and standards. But specifically, what we're now seeing more and more is that especially the financial sector and including insurance wants to know what the actual risks are. I mean, I know recently the Hurricane Alley in the US, where what was the big town that was flooded by Hurricane Katrina?
New Orleans.
New Orleans. Yeah. What I understood is no house now can get a mortgage anymore, which is giving me goosebumps, because that has a huge impact for the middle and lower income citizens. And now with the recent impact of the fires in California, I don't know if some are moving towards bankruptcy, but that is a huge impact, which will be resulting then eventually that certain areas cannot be insured anymore from a mortgage perspective. But I assume that insurance is also correlated to other aspects, which will impact human life very drastically. I don't know what my question was, but
are you innovating climate?
Innovating climate. The reason why I've got lost is that once you realize the tipping points and the trickle downs of what the climate system of our spaceship is doing, it will have it goes much faster than we realize. I mean, I know there's always a big joke towards McKinsey. They always showed the linear curve, and then suddenly became exponential, and now exponential is the norm. Yeah, because everything turns into a hockey stick somewhere. And I
wanted to say hockey stick in the next sentence.
And that's what you're seeing now with the changing climate. I'm going to use that word instead of climate change. The changing climate is that we humans have difficulties grasping what's happening, and the most visible thing is what banks and insurance companies are doing, or at least are behind the scenes are doing a checking and see what kind of stranded assets they have. So going back to innovation, I mean, before we can answer that, what is happening in climate risk management, and what does it entail? What is the topic, and what kind of opportunities is coming up? Because risk always tends to have a lot of fear and threats, and we have to move away. And but on the other side, if you understand what's happening, what does that do with those in mind? I mean, so that's a more psychological mind shift.
I think there's a lot in there. Let's unpack that. So first of all, I was thinking when you said risk always has like this area of be careful. Risk, there's this cliche that the Chinese character for risk means for danger means risk and opportunity at the same time, and I think that's true here as well. So climate change is really real. Let's focus on climate for the sake of the argument. There will be winners and losers, both in the consumers. In house owners, there will be losers and there will be winners. There will be companies that are losers and winners depending on how they approach it. So that's one item that we can kind of dive into deeper. Second is that I think you mentioned a lot of risk management frameworks like the GRI and ESG framework. It's important to know that there are really two approaches, is the inside out and the outside in approach. So the inside out approach is, how can I as a company, for the sake of the argument again, have a positive impact to mitigate climate change? That's a very relevant question.
And becoming relevant every day.
Sure, but that's 80% of the time not the viewpoint, the kind of point of entry of the topic for me. So 80% of the work that I do is outside in. It's the survival instinct of a company. Understanding if this happens, if climate change happens, if climate change in this trajectory happens or that trajectory happens, or are we going to a 2-degree hotter world or going to a 3-degree hotter world? Are we going to have more wildfires? Are we going to... What kind of impact financially will that have to my existence as a company and or a bank? So it can be... so for example, I can be a company in Portugal where I do a lot of work. If I am a company that manages all the infrastructure, like all the tolwegen. What's it?
Payroads.
Payroads.
That's just there's a better word for that.
There's a better word for that, but we know what we mean. It's the roads where you have to pay. There is a company that manages all those roads. If you have to reinvest, if I'm that company and I have to reinvest like 15 billion euros to maintain all the roads and make them future-proof for the next 20 years, I really want to know what the climate is going to do in Portugal. Because if the climate is becoming unbearable in summer, there will be less tourists. Less tourists will mean less income. Less income will mean that I will not have a return on investment of the 15 billion that I will going to invest now. So maybe I'm going out of the whole Portuguese market. I'm going to other countries where the tourism is going to be. So you approach climate as a risk to you, not as much as a risk to humanity or to...
And so basically you're running future scenarios.
100%. I think 80%, 90% of the work that I do is either stress testing, which is a real heavy scenario on the shorter term, like 3 to 5 years. That's a really regulatory driven requirement for all banks. So all banks do stress testing all the time. They are obliged to do that. They do it themselves. They do it on climate, but they also do it on a recession scenario. They also do it on a pandemic, on a cybersecurity scenario. And they basically take something which is what the magic words are: severe but plausible. So you take a possible future scenario in the near future, 3 to 5 years, which is extremely out there, but not Hollywood kind of scenarios. It could happen. And then you do kind of a shock to the system, like if that were to happen, am I still business as usual? Am I still able to to survive, basically? And so that's the stress testing part, and the scenario analysis part has a much longer horizon, 10, 15, 20, 40 years, 80 years. And the goal is also very different. It's understanding your long-term viability as a company.
Which is more business strategy and
So a stress testing would be more, in general, you would focus more on the impact on the financials. Which for a company, for example, is profit margins or a revenue. For a bank, it's capital requirements, provisioning, so you have to credit loss. And scenario analysis would be more to your business model. Like if you are a single player real estate bank in the same kind of region where, if you're a single player real estate bank in the south of Spain, where it's almost unbearable even now. And it will, if we don't do enough in the next 10 or 20 years, things will the Sahara will kind of flip over the Mediterranean and go to the south of Europe.
Which in the summer it can already be plus 50, 40, 50 degrees.
If 80% of your balance sheet is in that region, you don't have a long-term fight. You have to do something. So what we then do is do a 20, 30 year scenario on 1 or 2 or 6 scenarios. And then think, okay, I have to reinvent myself partially, totally, or not at all, or I'm good.
That dares me to ask the question, in general, the scenarios could all be the same. Your scenarios for the companies are, let's say, you have 10 standard scenarios, or?
No, it really depends. First of all, it's not. This is a technique that I use for sustainability and climate, but it's a really old technique. So the whole idea of scenario analysis is extremely intriguing. It's developed by Shell, by the way, which is a poetic justice in a certain sense, or at least the way that I approach scenario analysis is very heavily inspired by the work, the pioneering work of people that were working at Shell in the 60s and 70s. But they were not involved. They were not concerned with climate at that moment, but more with geopolitical risks, for example. And still, Shell, every couple of years, they just published a news version. They call it Shell Lenses. And they take a couple of really big political, economical, social, or technological developments.
Yeah.
They put it on a certain axis. They choose 3 or 4 of these scenarios.
Yeah.
And they kind of extrapolate towards the future. And it learns them an awful lot about their current state.
Yeah.
And the whole idea is that what you do is you create a set of scenarios that are meaningful, relevant. It makes sense to have that set of scenarios. Whatever, it's not about predicting the future.
No,
it's becoming, because you're exploring a whole range of possible futures, you will be more ready for the future that actually comes up.
I would say you're more maneuverable.
Yeah. So it makes you much more resilient for the future that actually happens, because if something really big happens and then you have to start thinking, you're always 3 steps behind. And I think one of the things that made Shell extremely successful in the 60s, 70s, and especially also the 70s with the oil crisis, they had a scenario on the shelf with exactly that. And I actually read in one of the books, I don't know if this is an urban legend, but at least it was put there, that when in the 80s, they already had the name of Gorbachev as a kind of person in Russia, which was then, of course, behind the Iron Wall, and they were a really big oil producer as well, but very much isolated because of the communism. And what Shell had, it was a couple of scenarios, or at least some thinking that if that ever changed and Russia would become a player on the world market, that would do something with the oil prices worldwide. So they kept a very close loop on what would make Russia a player on the world market. Well, then communism should come to an end, or at least should be opened up much. What are the powers within the younger generation of leaders in Russia that have a more liberal approach? And they had a list of people that, if they came to power, they might be able to kind of shift it. And then Gorbachev happened, and then the fall of the wall happened, and they were ready. So it's really that kind of thinking. And I approach it on a very specific climate risk and ESG scenarios approach.
Yeah, but then again, it's not very far away from that kind of scenarios.
No, not at all. No. So the technique is exactly the same.
Yeah, but also, what I mean is that to understand the future, you need to take a lot of aspects into it. Geopolitics, birth rates, change, globalization, and all that kind of topics. And then depending on where the need is to understand it, you can redefine it.
Yeah.
But I would, the way you're describing it, that is also part of climate risk.
Yeah, sure. So it's not isolated.
No.
So what I just mean is that I always put in. So I don't isolate it. If I said that, I was not clear enough, or at least if you interpret it like that, I will say that I often use climate scenarios, but not in isolation.
Yeah.
I always try to embed them in geopolitical reality. For example, it's quite meaningless to only think about climate if you don't take into consideration the election of Trump, the move away from climate agenda, the reaction of the European Union with the omnibus packages. That has been much more relevant in the last couple of months than following an NGFS scenario 1 or 2. Although I would argue that kind of the wheels of time have a certain... So climate is a really long-term development, and political is shorter-term development. So you can also not really understand a really long-term scenario, like 30, 40, in 40 or 50 years, Trump is irrelevant. Because
we have no idea what will be then.
Exactly. Yeah. And maybe in 4 years' time, there will be a next president who will have... Because the Americans are totally fed up with Trump, they will choose the other candidate who is much more liberal than they would otherwise have chosen.
Yeah.
Maybe. So you also don't have... You shouldn't look at like a day trader approach to the topic.
Agree. But then with today I read in the news that the International Agency of Energy published a report that AI will require so much energy, and they said, on the other hand, maybe AI will also help to lower or increase the efficiency, and yet they will require a lot of energy. And then it makes sense that now Bill Gates is investing in small nuclear reactors because we need to power all these AI systems. And then that fits into the framing that we need more nuclear power plants because renewables will not be able to do that. So it's interesting how supply and demand frames something. Yeah. I'm from sustainability is not the right word. I'm from sustainable innovations background, so with things with no waste, and we reuse everything, and we do it efficient and effective, and not just efficiency. If you know that future chips will be run on photons and not on electrons, it's like it doesn't make sense to have nuclear power reactors because the data center will run 80% less energy. Yeah. So it's then it's sort of like interesting to see those scenarios within the different silos again.
True story.
Yeah.
I asked ChatGPT whether he thinks or she thinks or it thinks that AI is for the better or for the worse for climate.
Yeah.
And it or they concluded that in the end, it might be in the short term, it might require more energy, but its intelligence can help make companies so much more effective and efficient, and supply chains, and get all the redundancy out, that he or she or they or it were positive on their long-term impact. So I really liked it. Like
it's long-term survival has just been confirmed
by itself.
No, I spoke to Ramon Veulings, who is a sort of a keynote speaker on innovation.
Yeah.
And what he mentioned about AI is that it will bring humankind back to its roots, because what AI basically does, it shows us what physics, biology, and chemistry have already told us for millions of years. And now suddenly it's like, oh, we call it innovation, and yet it has always been there. And and even we are going back to ancient techniques and technologies, and we brand it as something new. So that is his positive note that what AI
I have one that's a bit off topic, but I'm going to say it anyway. Otherwise you'll just cut it out. I heard from somebody who's in the coaching industry who is really concerned about her future, because you would think that we have now artificial intelligence, so real human intelligence and empathy and becomes more important. So it becomes the skill to listen, to ask the right questions have become more valuable than it did before AI. But she said that she actually feels that there are less people because people like to talk to AI so much because it actually reflects what you want to hear. So it's really good in mimicking, kind of being the perfect coach for you. So people use it as a coaching instrument.
It's interesting because it does also include a lot of bias.
Yeah, sure. But people love bias because they want to hear what they like. I think it's partly that you ask a question, but you really want to get the feeling that the other understands you totally. It's like talking to a friend.
but
who is not too critical.
But that does say something, and it will be also an interesting bridge to your business, Henk Jelle, that the how do you call that? The majority of coaches, and then I'm referring to quality, is more that you give what people want to hear, but then what is actually your impact as a coach?
Voilà. Yeah.
So if AI can do the generic part, it will, in my opinion, it will never do asking the right questions. Is still a trait humans can do, and see the elephant in the room. And I assume that it's also relevant for risk management. I mean, are you willing to accept that there is an elephant in the room, and are you willing to investigate that? Yeah. And are you able to ask the right questions about what is coming at you as one of the many tsunamis?
I think that's a really interesting topic. So you mentioned earlier traditional risk management. I would like to make a different distinction, which is slightly the same, but it's different. You have regulatory risk. So the things that as a bank or as a company you need to do.
It's like compliance.
It's compliance.
Yeah.
And then there is the real risk.
Yeah.
And in the second one are the elephants. So most of the time, for example, if there is a bank failure, they were totally compliant the day before the failure. So,
what is a bank failure?
A bank failure is if a bank goes bankrupt.
Okay, yeah.
So so for Lehman Brothers was a bank failure. Silicon Valley Bank 2-3 years ago. I think First Republic was one in the US as well. So Silicon Valley Bank is a really nice example. So Silicon Valley Bank was a bank that was for a lot of tech. The balance sheet was a lot of tech companies and tech investments. It started as a really small bank, and then it kind of exploded. And I'm pretty sure that it was as compliant as could be reasonably expected. A bank is never fully compliant, but you're always in a supervisory dialogue on your deficiencies, and you always have a good grade here and a reasonable grade there. But I'm pretty sure that Silicon Valley Bank was pretty okay-ish. The big elephant, as you would call it, is of course that you are extremely concentrated in risk.
Yeah.
In terms of your balance sheet. So if you invest everything into one asset type in one region, if the big tech companies go down, you go down with them.
Yeah.
And the same, you could arguably say the same for example, a typical retail bank in the Netherlands, which has 80% of its balance sheet in houses in the Netherlands. If something happens that hits you, it hits you totally.
Yeah, you're gone.
Yeah. So the elephant in the room is we need to diversify. We need to be geographically, but also in terms of assets. We are a new bank, so we need to build our balance sheet. So we are offering very competitive rates, and we are bit easier on the taking on newer clients.
Yeah.
Which means that you will probably take on the clients that other banks have rejected. So if you are a new bank, you have to fight for your market share. That market share will probably have a lower quality of assets than a typical bank that has already built it. So there is these kinds of elephants are often not talked about enough.
Interesting.
So there is the compliance risk,
Yeah.
and there is the real risk of which we shall not speak.
Because usually you mentioned diversification. I mean, from a startup perspective or a business perspective, it's always smart to have a diverse portfolio.
Yeah.
Just because if one sector is not working, you can jump to another one.
Mm-hmm.
Then I'm sort of like curious, from a common sense point of view, you would never put all the money into one area. And underlying of that question of the remark is that we've been used to a growth which started off in the 60s, 70s, which was always going up.
Yeah.
Sometimes we had a sort of recession, but its tendency was always going up. And I think around 2000, it's my feeling, we sort of hit a ceiling, and now we are sort of going up, going down, going up, going down, as if we cannot go further, and some are even moving away. The whole retail sector in the Netherlands. There's a lot of shops closing nowadays because their business is not working at the model as it is not working. So you see a lot of decline also happening, and you see a lot of business owners and investors who have been used to the growth now suddenly like, hell, what's going on? We cannot cope with this because we're used to putting money in, and we're used to, okay, it will grow eventually, and then we step out, and now it's more volatile. How does it reflect to bankers? I mean, are they have a sort of entrepreneurial mind or sort of like a lean startup mind, because they know at least from a sane banker, which you see in the movies always, that they question the person who wants to loan very, very long before they actually going to invest, and their investment portfolio used to be very diversified. At least it's the perception I have.
Yeah.
What changed that?
Yeah, I'm going to. Those are a couple of things at the same time, but first I'm going to start. I disagree on your feeling that we have gone in a growth until 2000 and then kind of became volatile. I think we had the best run in history up to now, basically.
Yeah.
So it's all humbug. Like, this is all noise. Like, the last couple of days, the markets were down 10%. They're still up 20% since 2 years. Like, to have been able to, if you had invested in any stock in 2000 or in 2010, and you are still up hundreds of percentages. So, and in general, I think we are the generation to have been born in the 70s in the European or in America, in Europe or in America, is, as a white guy also, is winning the interstellar galactic jackpot. Like, we had the run of our lifetime. Like, we could go to school, to university. It was cheap. There were jobs. The 80s were a bit tight, but it was still pretty good. It was not the 30s. It was not the 50s. There were so many opportunities. There was whole bunches of people whose families had never had the money. The kids could go to college. The kids could go to university. It cost nothing, next to nothing.
It's all state funded, yeah.
It was all state funded. In Europe, in our world, that's of course true. On the other side of the water, the GI Bill, all the people coming back from Vietnam, there was and also the World War II, the GI Bill. Everybody who was a veteran could go to the university. It was the biggest move to create a middle class ever. So we had the run of our lives, and then And then you were talking about the stock markets, like you have to have a diversified portfolio. I think stock markets have gone up and up and up and up and up. Even COVID was the best run ever. Now we have Trump, and it was down to. I was jokingly saying yesterday to somebody because somebody asked me I'm down so much on my stocks. What should I do? And I said I have one advice for you: nothing, because this guy is crazy. And before you know it, maybe on Monday he says, "Oh, the tariffs are off," and it was actually yesterday evening, and now the stocks are up 12% again.
Yeah, but the stocks are also, in my point of view, a lot of psychology and quick trading, and for me, it's still like a big gamble. But
only if you're in it for the short term.
Yeah.
If you are in stocks for the long term, and I'm not a big stock broker, but if you take a 20, 40, you always win. Just because the GDP of the world grows. And if you have a diversified portfolio, as you say, so if you're not in single stocks, like NVIDIA could go up, NVIDIA could go down, Shell could go up. But if you're in an ETF with 600 companies following the European economy will be bigger in 20 years than now. So it will always go, in the long run, it will always go up. And you should play the long game. And then it's funny what you say about a diversified portfolio. Yes, of course, you as a company, you want to be diversified, but diversification, every new client segment costs money because you have to do marketing. You want to be known in the market as the go-to company. So I totally get it if a company, especially a startup, is really concentrated, because most of the time it's just a couple of people.
Yeah.
They have 1 or 2 or 3 really good clients. They know a couple of tricks. So for example, you want to start with another person, you want to start a company on risk management in the Netherlands, working for banks. Then you start with 2 or 3 or 2 people, and you work at banks in the Netherlands, and you do some kind of risk. You're zero diversified. I've made it my priority from day one to diversify. So when a company came to me in Portugal saying, could we maybe join up because we are doing something that is complementary to you. So we are, and you have a skill set that is complementary to us. Maybe we could join forces and we could do some work in the Netherlands and you could do some work in Portugal. That was a diversification. I immediately also moved into companies outside of banks. So I put some effort in it. So we are now 2 years and 4 months, which is still very, we're with 14 people. We have 2 big industry lines, 3 big industry lines actually. We do the financial services in the Netherlands, which is the starting point of the company. We have a whole group of people working on international projects, which is in Portugal, but also in various countries in Africa and in the global south via NGOs. And we have a couple of companies where we work with a more strategic management consulting, which is not so much related to climate, but we do it for smaller startup scale-up companies that are in a sustainable domain. So either a social responsibility company that has difficulty getting from to the next level, and we help them with, for example, some financial projection. So it's not that much that the work itself is climate or sustainability related, but the work that we do is classic project management consulting for companies that have an environmental or a social dimension. Other work that we do is for a small startup in sustainability, sustainable aviation, general aviation. So now suddenly it seems we're pretty diversified. And the fun thing is that when I started the company, I thought that the financial services in the Netherlands would be the really steady business and the rest would be kind of the fun things to do. And now I still think the other things are the fun things to do, but it's more that the work in the global south, so the NGO work and the work in various African countries with central banks is actually the more steady work. because they did not abandon all their values as quickly as banks did.
That's interesting.
Yeah.
Especially Africa. I mean, they're touching 1 billion people very soon.
Yeah, I think you're.
But there are 3 economies in Africa, so let's be
fair. I understand why you say that, but every country is actually its own world. Yeah. So there is no Africa. Africa is not a country. It's also the title of a book.
No, Africa is a continent.
It's a continent, but it has very different maturity levels. What I was trying to say is that I think it changes your point of view if your average age is 16.
Yeah.
As opposed to, I think in the Netherlands, 61 or something.
Yeah.
It does something with the public narrative.
And also the energy.
And the energy. So I believe that we are in the Netherlands, the topics are healthcare, pension funds. Of course they are. Everybody is old. If you're in Africa, the average age is 16 or 17. People are interested in education, entrepreneurship.
The 70s was the same, I think, the demographics. I mean, that was the younger generation. There was nothing left above that. It was partly, of course, due to the war. And that was a vibrant period. Everything was possible, and everybody was like, we can shape the world.
Yeah.
Look what we've done, quote unquote. And the same is happening in Africa, but also in India and in South America.
That's true.
What is it? What are you doing there, and what is different? What is noteworthy?
Yeah. So what I'm doing there. So part of what we do with RiskSphere is working with NGOs.
Yeah.
And that can be IMF funded programs, World Bank funded programs, and at some point, what the IMF or the World Bank do is they fund programs, or the Bill and Melinda Gates Foundation or the MasterCard Foundation. So you have the big funders, and then, for example, they fund a big program which is called Green Public Finance Management for an African country. They are not going to implement the measures that. So they fund the money, and then they are looking for implementation partners. Almost every NGO has a separate branch, which is called the implementation partner, and they partner up with a lot of people in the field. Can be freelancers, can be small consultancies, can be bigger consultancies, but they often aren't. And I am one of those, and not me personally, but we as RiskSphere. So I got connected to a French NGO. Who asked me for something to do with climate stress testing in Rwanda, of all places, with the Central Bank of Rwanda. I went there. I set up kind of a pilot in the country. One thing led to another. We set up something else. We made it bigger. Fantastic work on that side as well. So now it almost sounds like I did it, but they did it, and I help them because we facilitated, and because we have been doing those climate stress tests since 2018-19, we have kind of a 5-year head start. So I can kind of tell them what works and what doesn't, and I can contextualize it to the Rwandan environment, and I can say, okay, if you start, I would do it like this. You have 3 options. I would advise 3. So I'm really an advisor there, and I've been involved since early last year, so almost 1.5 years now, or 1 year now, and we are going. This is a project that's going on for another half year. So in the end of the year, we will publish a stress test report for the Rwandan Central Bank, or the Rwandan Central Bank will publish a report, but I will have played a role there.
How is Africa, the banking sector? I mean, what is it? Is it how different is it, or how similar is it?
It's very different. We just said it, like Africa is not a country. The banking industry in Africa does not exist.
Mm-hmm.
So Kenya is a totally different situation than Angola, where I also do some project work. is very different than Mozambique, is very different than Rwanda.
Is banking there still traditional as we were used to in the 40s, 50s? Or I mean, you explicitly mentioned banking industry.
Yeah, but it also, first of all, that's let me clarify that I work with the central bank.
Yeah.
And the central bank is the supervisor, depending on the country, but is often the supervisor of the banks, the insurers, and the microfinance institutions. So I'm talking about the financial sector. Banks are often pretty well regulated. Insurers are really dependent on the regulator, but also depending on the company. You still have very small insurance companies, sometimes really specific. So you might have the insurance company for former employees of schools in a certain region, talking about concentration risk. But that's also 14 people in an office. And so it's all over the place. And the microfinance institutions are bank-like. So in the sense that they distribute a loan or a credit, and there is credit risk involved, but often they are really small and also really local. And their credit risk is extremely high because they are stepping into a domain where the traditional banks don't come. So by definition, the credit risk of an MFI should be higher. Microfinance institutions should be higher than a bank because otherwise they're not additional to the system. So, for example, so I can't answer the question in general. I can answer the question for one or two countries. Rwanda, you have two really big players, Bank of Kigali and ENM. They are decently run, in a certain sense traditional, in the sense that they still have a lot of offices for our sake, because we don't have any office anymore. In another sense, they're pretty forward because they skip a couple of, and that I think that's one of the stories of Africa in general, is that they come from a 3-step behind position, because they don't have any legacy, they can move sometimes much faster than we can, and that's sometimes I'm really surprised about how digitalized something is.
Yeah.
And sometimes I'm really surprised by how cash-driven something is, because we're not used to cash anymore. But to give an example, the most used public transport in Rwanda, in Kigali, is a motorcycle taxi. So there's a guy on a motorcycle or a woman on a motorcycle is wearing a helmet, because the president likes that. They wear another helmet. You step onto the motorcycle, you put on the helmet, and you scan a QR code on their vest, and you pay.
Wow.
And that's, first time I saw that, I was like, whoa, fantastic. But they totally skipped it, because the whole system works for everybody. So the taxis have no hassle with money, and they don't have any cash with them. There is a lot of saver. Lots of saving. So sometimes it's really, and also with, for example, the pilot that I'm doing, we worked for about a year to create a pilot climate stress test. One thing that's really different from the European context is that we decided to do it for banks, insurers, and microfinance institutions simultaneously, which is really difficult because climate risk, the same scenario, pans out totally different for a bank or an insurer. Maybe sometimes even contradictory. So the bank has, for example, a loan to an a farmer. The farmer might have insurance. So then the credit risk for the bank is zero because there is an insurance, but the insurance company has a loss. So the pathways to the financial risks are very different. So, but at least we put that in. And the fact that we build a climate stress test for all three of those financial sectors within 9-8 months is unbelievable. But it's also because we learned a lot from the past. We could do it pretty quickly. And now they said to me, well, maybe we should start thinking about a second pilot. Couldn't we do it on biodiversity risk? Because we also want to explore that one.
Interesting.
So you start later, but because all others have made all the learning is so much in the system that you can move much faster. And I think that's one of the miracles of Africa. And I think that's something that we will still see in our lifetime. They may come from behind, but they're going to overtake us big time.
Yeah, they are in an unexpected ways to the Western mind.
Yeah.
I have to phrase it that way.
Yeah, and they're younger, they're more energetic. They don't have any legacy systems. They don't have any. They're pretty top-down managed often. So if they can get their act together in various countries, various regions, don't fight too much, and then they are a force to be reckoned with.
And there's a lot of bottom up at the same time, which makes it also faster.
Yeah, sure. But what I mean is that people are used to the fact that if the government says that we are doing it in this and this way, then people are saying okay, and start moving, and there is no years of discussion.
like in the Western world.
Like in some of the Western world.
Yeah. What is interesting about the scenarios, because it's a lot of foresight and trends you're incorporating, and it also helps to have a better understanding of your surroundings, banking or business or NGO wise. Does it also include the macroeconomics and the perception on that? The reason why I'm asking that is we have various thought leaders who are on the degrowth, so not growth but degrowth, because in their perspective GDP is not a neutral measurement anymore, and I think that also depends on context. The Western world is aging, so where will your growth come from?
Yes.
Because your consumers is limited and even going down.
Yep.
And then they have conceptualized the idea of degrowth. And then we have neoliberalism, which flooded the gates for the opportunity to increase depth. Yep. Which is also a Western world legacy. I have no idea how that is in other regions. How does that impact scenarios, whether that's climate or others? Because basically you're running your assumptions from the current economic framework, which is generally now the narrative from neoliberalism. And we're seeing that it has its maximum shelf life.
Oh yeah, true. So first of all, So I'm going to stick a pin in that one. I was thinking about what you said about degrowth, and so I think, but maybe I don't have the definitions right. But I would say that degrowth is the intention to consume less.
Yeah, that's how they frame that.
Yeah. While what you say about we are aging, economic prosperity, that I would call that contraction.
Yeah.
So economic contraction. So you can already think.
That's interesting. That's maybe it's good to make that distinction.
So degrowth is more a personal choice within a generation.
Yeah.
And within individual consumers. Like I want to consume less. I say, depend whether or not if people are going to do it, we are going to see economic contraction anyway.
Yeah.
Because of demographic changes. So there are going to be less Dutch people in the Netherlands in 10 or 20 years time than we have peaked. We are going to peak at 18 million, then we're going down. That means that economic growth will go down as well.
Yeah.
But that's not a personal choice. That's a demographic reality of less people consuming.
Yeah.
And then within that frame, you could also have people who want to consume less.
Yeah,
but that's a personal choice, and that would be degrowth in my definition.
Yeah, but it's good that you frame it as economic contraction, which emphasizes more that the consumer demand is lowering.
Yeah.
And degrowth is personal choice, but they're also saying we have to consume less, which is good for the economy. But so that doesn't correlate to changes in demographic.
No, no, exactly. The one is a choice, and the other is a reality. And it also, to loop it back to the work I do in Africa, like if your policy as an African country, I was in Angola in February. If every year, every street has a new, they have like 8, 9, 10% economic growth per year on year. That's not strange because there is an increase in population. And if every street at the end of the year has one shop more than they had in the beginning of the year, that's 10% economic growth. So it's so easy to grow if you're growing as a company, as a country, in population, in entrepreneurship, in education. There's now, I read in Angola now 0.14% of all people have a bachelor degree. If you double that, it's 0.2. If you double that, it's 0.4. It's still nothing, but you can double it year on year on year on year with very little incremental cost. So, of course, they're going through the roof.
Yeah, from a percentage point of view.
From a percentage point of view, and if those people come back and they start a company and they're, so of course. So that's one thing. And the second is a more technical answer to your question. So what you do if you do scenario analysis or stress testing, but let's make it very specific on stress testing, you create 3 or 4 scenarios. Let's, for the sake of the argument, say that are climate scenarios. So we are doing climate stress testing. You create 3 scenarios. Then you see what the scenarios would do in their pathways on the macroeconomic variables. Mm-hmm. So GDP, unemployment rate, interest rates. Then you make a breakdown to sectors. Like, is it general for the economy, or is it specifically for agriculture, or is it specifically for... Then you go to the individual, let's say, banks. You ask the banks, what does your balance sheet look like? And if a bank says, yeah, we're quite skewed towards agriculture, and you say, oh, I just did all the analysis before. So I start with a climate scenario. It went to macroeconomic analysis. Then I did that sectoral analysis, and I found out that this scenario specifically has more impact on the agricultural side. Hey, bank, you say that your balance sheet is pretty skewed toward agriculture, so you're more
susceptible.
You're more susceptible to climate risk in this scenario than your competitor. Then you do what is called a balance sheet mapping. So you take the balance sheet and you say, okay, this is hurt 4%, this is hurt 3%. And then you do some further analysis and then you write a report. So there is always the macroeconomic analysis, because it's the step between the companies and the climate. And that's funny, because it's also in the real world, you will always have a bank or a company, also in another industry, is always part of the economy at large. So if a certain scenario, whether it's political or it's economical or it's environmental or it's climate within environmental, it's a social, you first want to know what the bigger impact is on the industry or on the economy as a whole, and then you specify towards the company within the economy, because otherwise you cannot compare like for like.
That's interesting if you phrase it that way, because climate risks is a systems risk, is a global risk. Something that happens somewhere else on the planet can have impact.
100%. The work that I do in Rwanda contributes 0 to climate change. 0. I mean, like 18 zeros behind the decimal. And then, but they're really susceptible. So they are totally at risk, but they also don't have to work on mitigation or of climate change. They have to work on adaptation because they don't need a net zero plan. They are net zero.
Yeah, that's. I had a previous guest who was in the field of carbon credits.
Yeah,
and he said Africa, it's just completely carbon positive.
Yeah,
they emit so little.
Yeah,
emissions as a global.
Yeah,
as a continent economy.
Totally. So they don't have to do anything about that.
Yeah.
So they shouldn't focus on net zero plans or transition plans or green economy. They are totally on risk mitigation of the risk of what's happening globally.
So that's interesting. It's a completely different mindset.
Yeah.
What the others are doing will impact us, but what we do will not impact them.
No.
In a way.
No, absolutely. And they have very little, so they're more about resilience building.
Yeah. But that's sort of the positive note.
But it is a very positive note.
Instead of the Western mind, or at least the Western framework of risk averse and extraction, because that's how European and Western economies work. And those countries who have modeled their economy the same as the Western economy, it's all extraction-based, colonial-based. And if you can skip that, which Africa, as you mentioned, can do with a lot of things,
yeah,
then you have a completely different banking spirit.
Yeah.
I mean, it's sort of like a free-float thought.
True. Also, again, depending on the country. So Rwanda or Mozambique are totally different countries. Angola, where I did some work, is one of the richest countries in the world.
It's a mining nation.
Mining and oil and gas.
Yeah.
So we were talking about the mitigation of, for example, physical risk. So Rwanda is very prone to physical risk, which is a result of the Western world, not of their own making. So that's one point. Angola has a high transitional risk, meaning that if in the next decades, say 50 years, the world moves away from fossil fuel, the economy of Angola is for 98.9% dependent on oil. So all the wealth in the country is built on oil. So the transitional risk is very high. So you have to work on scenarios to make your economy more diverse again.
Angola is above Namibia.
Yeah.
So they're big ocean and a big desert, if I'm correct or not.
Yeah, and a lot of oil,
and
a lot of people from Texas, and a lot of people from China and Dubai. I read, and I heard actually from somebody that between Houston and Luanda, that's the capital of Angola, for years, I don't know if it's now, but for years they had the only charter flight in the world that was only business class. they had no economy class because all the big oil guys and women wanted to fly business class, but there was just no demand for economy class because nobody flies to Luanda if you're not on business. So there was once or twice a week there was a full a Boeing or an Airbus, I don't know what the story didn't tell, but there will be a big charter plane where the economy class was totally taken out and it was all business.
If you put it that way, when there is a transition moving away from fossil fuels. The narrative is we need to move away because we have problems with the emissions. My perception is the emissions are a resource and not a problem, but that is for a different topic. But that means, and what is it? That I saw a graph that's 80% is used for combustion, and then 20% is used to produce chemicals.
Okay.
Or in a way to
fertilize. I believe you.
But that's sort of like the biggest chunk of fossil fuels we use, gas and oil and coal, and peat is used for combustion, for heat and electrons, and only 20% for chemicals. And in the transition we're moving now, if the demand for fossil fuels lowers because we have substitutes for primarily energy, then the oil price goes down, which will break various business models based on fossil fuels. But it also means that countries on the African continent, of those who have an economy running on fossil fuels, will have an existential threat. And I'm then curious, what will then be the trigger to diversify your economy to see natural capital as an asset? Which the reason I'm questioning that, because we're talking about Africa, and I just realized that mankind, the human race, as Neanderthal and whatever happened before, we all originate from Africa. And I see a sort of an analogy that the world is going back to Africa.
Oh, that's a nice way of putting it.
In a way, because it's a younger population. It's moving towards 1 billion, which equals India, if I'm correct. And China is a little bit bigger. But it's on the map, it's much bigger. We've drawn Africa, I think, 1.5 to 2 times its size, too small.
Yeah, true.
So that is also sort of like a mind shift. And growth will happen in Africa. And what's interesting is economic contraction, I'm really glad you mentioned it in that way, will happen in the Western world. We have climate collapse in the Western world because we've designed and created cities which are not suited for what's happening, and where the oil and gas and all the minerals are from the places where we originate from. And it's the same with Middle East. Saudi Arabia is investing heavily in greening the desert for a very viable reason, because the forests were always there. And with the different climate scenarios, you now have that finally it is becoming mainstream that the Gulf Stream will quit. And when it will quit, it will become colder in the winter in Europe. Maybe or not, that ice will come back, the glaciers will come back into the European area. We can walk from the Netherlands again to the United Kingdom, which is a whole society on the ocean, Dorisbank. We cannot go there, but there was a huge economy there. But where can we go as Westerns? The same will happen in America. So we have to move south, back sort of to our roots, and it's, you mentioned it that way, and it's like, if we're talking on this topic, it's sort of like the emergence of we're going back to Africa. Nobody realizes that.
Oh, maybe that's true. I think I think you're right in a certain sense. I think philosophically, I love this, like the narrative. Let's go back to our roots. It will be decades, centuries, but of course,
we have no idea.
We have no idea.
How fast?
I do think that Europe is stuck in the middle. If we're not, so we have this famous book, Untergang des Abendlandes, the downfall of the European and the Western world on this side of the water.
Okay.
Oswald Spengler.
That's a recommendation.
That's a recommendation. And that was more about the moral collapse of Europe, and with America being progressive, liberal. You had all kinds of Oswald Spengler said in his Untergang des Abendlandes that he thought that the focal point of society being in Europe, like the pinnacle of society being in Europe, and center of the world was no longer to be in Europe, but would be elsewhere. And I think Africa has the big prerogative that it's really young and really forward-looking. China is extremely forward-driven, very technocratically and almost dictatorship run. So
they're going back to their roots knowing that they are a race that can lead the others in a way.
True.
There are some history books about China, and they always have been very outward looking.
Yeah.
And
so they have a prerogative, and then you have the US. And you wouldn't say it now, but I was thinking about this Warren Buffett, the stock bro, the legendary investor. We mentioned stocks just previously. He said, "You never bet against America, because the US is so risk-taking and so entrepreneurial, and they really lax on regulation. So they also have a prerogative, like a plus. And then we have Europe, and if we're not careful, we are talking all the time, getting older all the time, creating new laws, creating new regulation. Don't do this, don't do that. No, we should innovate. Yeah, let's make a plan, and then let's make the plan for the next.
The European Union started in the 50s?
Yeah. With the European, poetically enough, with the European Union of coal and gas.
Yeah. And now it's become extremely bureaucratic.
Yeah, I think, but the government everybody gets the government that they deserve, right? So we are in ourselves as a company always also we really like to talk as well.
Yeah.
So I think every country and every region gets the leaders that they deserve, and that's also true for Europe.
Yeah.
The reflection of everybody is always.
That's true. The more conservative you become, the more.
But we are really conservative.
Yeah.
Europe is, if you compare us to China, to the US, we've always been the more conservative. We're like the elder uncle with a tweed jacket.
But during the VOC, the European exploration industry, we were very risk takers then, or were we also risk averse?
I don't know.
Because that's the period that the company bonds and shareholders emerged.
Yeah. I think we had a good run, and it might have been the golden century for us.
But I just purely from you meaning conservative. Were we then also conservative, or were we then risk takers? And
I think we were more risk takers. Maybe we were much younger then. I don't know if we were
as a culture.
Yeah,
because we didn't get.
But also as a people didn't age, right? So I would guess, I don't have the numbers, right? So I would guess that if you're in the 17th century, like 1660, the average age in Amsterdam was also 20.
Yeah, there was a lot of infant death. Some would make it until the 80s,
but it wasn't like people didn't really. Technically, there were a lot less people.
Yeah, that's.
And I think in general they were younger. And so maybe that's a link, but I don't know. This is like speculative, but it's. But at least I think that since the world wars, we have aged, and we have also become inward looking.
Yeah.
And
it's very much like China did.
Yeah.
And we have a challenge of opening up again.
Also, I'm always really intrigued by. I mean, I'm not a sage and I don't have any crystal balls, but looking backward, what were people thinking when they outsourced all their production to China, to a country that is so good in copying things?
Mm-hmm.
Like, if you look backwards, thinking, okay, Ford and BMW, and they all kind of started making all their products in China. And China learned everything they wanted to learn.
Yeah, they were smart.
And they
were very smart.
Created their own cars. The first one sucked. The second one sucked. The third one was a hit. And if you now look at the 10 most sold companies in China, the first 7 or something are not even
sold cars.
Sold in Europe.
Yeah, sold cars. Yeah.
We don't know the first 6 or 7 because their inner market is so big.
Yeah.
Why would they go to the Netherlands or to the Benelux or to we maybe they could sell like 1,000 a year.
Well, what they're good at is buying European companies.
Yeah.
Saab and Volvo is
True.
Chinese and
But why did they buy it?
Technology.
Yeah. And the brand.
Yeah.
So I know that when Ford was almost bankrupt,
Yeah.
and that's around 2000 something, Ford almost went bankrupt, and there was a brief period where the logo, the blue oval, as they call it, was worth more than the company because China wanted to have that. So they wanted to build a car with that logo on it. So the brand loyalty, the brand recognition.
That is huge.
Yeah, and that was also an intermediate step. So first they wanted to have the Volvo and the Range Rover, and now they're actually the Xpeng, the Seeker, they're all new. They don't need the brands anymore because people believe in the Chinese brand anyway. I would buy a Chinese car without a blink of an eye. Today, it's probably as good, if not better, than a European car. It's a fraction of the price. It's probably more reliable. So why not?
Yeah. I have no idea about Chinese car. I know build your own. This is BID?
BYD.
Build your dreams.
Build your dreams.
Build your dreams.
Which I once read that it's somewhere a bit ironic because most people that buy it are in the age where your dreams are being deconstructed on a daily basis. So
what is interesting about, and this is two topics which I still want to cover, stranded assets.
Mm-hmm.
I've learned from a visionary sustainability innovator, Gunther Pauli, that stranded assets are actually good because you can use the net present value for new investments. If you have to write off your what do you call it in English? Your what does it call? Your annual. You have an investment and then you have like 20 years.
Oh, an annual rate of return,
or something like that.
Yeah, discounted cash flow.
Discounted cash flows. Okay. So that helps you to do a new investment if you have a stranded asset. That money is locked away and you can use it for today. And when you're doing a lot of stress test scenario analysis, climate risks, once you're in that space, or once you understand system thinking and system dynamics, like me and the others I speak with, you see everywhere stranded assets. And that brings a lot of fear to those who have those on the balance sheet. And they scream very loud that they need funding to keep going or whatever. And I can assume that once you do scenario analysis stress testing on a climate change perspective, you see a lot of stranded assets emerging. What happens when you put that elephant forward, and how is that perceived from a bank perspective, insurance, and maybe even also companies?
True. So a really relevant question. It's one part of the equation. So if we do scenarios, we have to see where does the risk materialize? If it's physical risk or transitional risk, and the stranded assets will be in the transitional risk scenario. So we go from a certain economy to another economy, or our company in a certain line of business which is becoming obsolete. That's stranded assets. So it's a transitional risk manifestation. To be brutally honest, it's the survival of the fittest. Like, yes, companies will go down. Whole economies will go down. Countries will have to reinvent themselves. But so what? You know what solves it?
No.
Time. Like, time solves everything. I have become time, the destroyer of worlds. I've become time, the destroyer of stranded assets.
Yeah, we are so short on the planet.
Yeah,
that it will.
Yeah, people will I mean, all the horse and carriage companies of the 1880s have gone.
Yeah.
They were stranded assets in their time when the cars came up.
No, so it's true. But the once you've acknowledged that stranded assets are a risk, I'm more in my line of work. I'm more on the innovation side. Then I'm like, whoa, what kind of opportunities can we do with that? And what?
But it happens all the time.
Yeah.
So what will probably happen is if I'm a bank and I have a lot of investments and loans and credits in my portfolio on, for example, classic agriculture, and that becomes obsolete. So I was in a certain field which, due to climate change, it's not viable in the Netherlands anymore. For example, I have a lot of, for the sake of the argument, if like a mental experiment, if we find out that growing potatoes in the Netherlands is no longer viable in 20, 30 years time, and I am a bank and I have a lot of loans to potato growers, first of all, I would ask them, grow something else. Save your business.
Save my loans.
Save my loans. That's basically what happens. If it's more structural in the sense of I'm very heavily invested in mining in the Netherlands in the 60s and the mining goes away, I sell the mines.
Yeah.
Like I sell them off at a discount of 50% to some company in Germany, and then they go down as well, and then they sell it to a company in Poland, and then that goes down as well.
You see that with oil refineries nowadays.
Yeah. So the stranded asset is never a zero value. There's always value in something.
Yeah.
It just depends on there's always a buyer in the market
who can extract
some value, and then they are also in a problem. Then they find another one. It's like it reminds me a bit of if you and I have a car, and we are thinking like, it's run its course and it's at the end of its life. Then it goes to Eastern Europe. Then it drives for another 10 years. Then it's being sold to Africa. There's again. Then it becomes a taxi, and it lives for another 20 years. And then at some point you drive in Africa and you think, whoa, it's a cool old timer. They use it and they use it on a daily basis, and it drives with so there is always a next part of the market.
Black Swans.
Mm-hmm.
It's a really good book to read.
Mm-hmm.
The unexpected happens when sort of a lot of stars align and nobody thought about that. Is that a topic in your business?
It's a mythical topic.
Yeah.
Because everybody has read the book, and it's become kind of a jargon, the thing to say for that one risk that nobody saw coming.
Yeah.
And then
volcanic outbreak somewhere with the whole Earth.
Yeah, but then
that's
I would argue, didn't you see it coming because you could not see it coming, or didn't you think about it hard enough? So I would argue that scenario analysis would be a way to lower the chance of a black swan, because you are investigating. So there will probably, for the example we mentioned before, there's probably an oil company in the 70s that was got totally blindsided by the oil crisis. Shell didn't. So in the one company, they called it a black swan. The other said, okay, this was to be expected. So did you do your analysis in the right way? Actually, I think a black swan is a very isolated event that you might or might not have foreseen and mitigated in advance. I read a book. I read two books. Two books come to mind. The one is called Green Swans and the other is called Gray Rhinos.
Mm-hmm.
The gray rhino, and I'm thinking of her name. She's called Tucker. I think Elizabeth Tucker, but it could be wrong. Wrote a book called The Gray Rhino, and she said the gray rhino is not. It's different from the black swan in the sense that it's something really big that you could have so totally foreseen. But if you are in a field and you encounter a big rhino, what most people would do is totally freeze because you don't know what to do. He said that's what happens more often in black swans. We know that we are in the line of fire for something. For example, demographic changes, like the downfall of a certain industry. This cannot hold.
We know it's coming.
We know it's coming, but we don't do anything because we don't know what to do. And then it hits us. And she said that's actually more of a risk metaphor than the black swan, although the black swan is really nice. And there's also...
But the good thing is what you mentioned, there are people who have seen the black swan because their analysis incorporated other parameters than those who are calling it the black swan.
I think if you define a black swan as something that is so has a so low probability and such high impact that everybody is caught off guard, I think there's always somebody who will foresee. You didn't think hard enough.
Just looking in the right place. Yeah.
You weren't looking, and you can miss it even if you do all the analysis, because as we said, you can, with scenario analysis, you can explore a whole range of possible futures to be more prepared for the one that comes. You might have missed it. It might not have been specifically that one, but to be totally off guard when a pandemic hit the Netherlands or the world in 2020, there were companies that were totally prepared. And not because they had inside information, but just because they had a whole bunch of scenarios on the shelf, like this could happen, that could happen. If today we get a worldwide cyber attack and internet is down for 3 weeks, a lot of people are in stress, and some people are like, there it is. So one person's black swan is the other person's opportunity.
Going back to the grey rhinos.
Yeah, and the grey rhinos is more like she mentioned that because the elephant in the room is such a cliche, but it's a strong image. But she says an elephant is also not aggressive. A rhino is extremely aggressive. So she changed the animal, and she said a rhino will probably kill you.
Yeah.
Because a rhino does not care about anything. The first thing it does is it doesn't ask any questions, first of all, because it can't talk. But a rhino is extremely aggressive. And it's really there.
Yeah, it will charge.
And it will charge. And she said an elephant sounds very friendly, like it's in the room and it could also stay in that corner. A rhino doesn't stay in that corner. At some point it will get you. So that's why she changed the metaphor.
And the green swan?
Yeah, I think the green swan is a beautiful book that I read years ago. And it takes this idea of the black swan and it pivots it to climate and sustainability.
Mm-hmm.
So it's basically, I would rehash the whole topic of the black swan, but he or she, I think it's a he, calls it a green swan and says we should focus more on understanding the real low probability, high impact scenarios and understand those better. Like we are still too much thinking in terms of 1.5 degrees and maybe this and maybe that. What I think it closely links to the tipping points idea of it can suddenly go very fast and then.
Yeah, and have you prepared for that?
Have you prepared for that? And then your whole economy or your whole industry is disrupted. Are you disrupted with it, or did you foresee? Do you have a plan B which you can really quickly scale?
Because one thing we've learned from the COVID crisis is that once the airliners stopped flying, it became colder at night.
Yeah.
Because
that's interesting.
The blanket of the airplanes was the exhaust blanket was gone.
Yeah.
So the climate could reset itself in 3 years. Yet it had 3 years to undo what has been done long before that. Yeah. And there were many other things that birds could hear each other again without the noise of the cities and so forth. Yeah. So nature rebound very quickly in 3 years' time. And that made at least me realize how much disturbance we are creating in our own environment. and that our spaceship Earth, Gaia, or whatever you want to call it, can so fastly rebound if emissions or whatever or the pollution we throw in is abruptly stopped. It will adjust itself almost instantly. And I'm saying that because of what you meant in Black Swan and the most unlikely scenarios in the cyber attacks that would just shut down. It will shut down transportation. Let's put it that way.
Yeah.
And what will happen then if we cannot travel easily anymore from Europe to China? And are we then self-sufficient? And now I was looking for the last topic, but this is actually the last topic. Self-resilience, and you named it. You mentioned resilience, but independence. As an economy or as a bank or as a whatever sector you are, we have realized that connectiveness in the global economy is beneficial in certain KPIs, but also not beneficial in other KPIs. Like for instance, whales. The pool of the whales is extremely important for the ocean circulation, and because we have container ships. We have oil and gas and coal ships. They tend to be 80% of the global maritime transport, and then we have container ships. They disturb the traveling of.
Oh, that's interesting.
Of whales, and as a result, the whales are disturbing the natural ocean circulation. And you mentioned that Africa is booming. Europe has an economic contraction. Yeah. That would be interesting from a resilience point of view of a future fit, becoming independent again. If you look at banks, they have the risk portfolio. Most banks operate globally. Yeah. But if
not true, by the way.
What?
No.
Oh, okay. But would an inward risk profile and then diversifies in the economy as banks used to be, at least that's my poetic perception.
that it is. But, I won't go into that one.
I mean, that's sort of like, let's if a future disruption occurs, whether that's a black swan or a gray rhino, what would that do with the financial service industry? Because then the reason I'm asking that is also because Ireland had no government there was something on with the banking system for 2-3 years, and the local pubs took over the role of banks, and the country run normal because the local pub owner knows who drinks too much and knows a lot of social background of the people, and knows, and that then has a good profiling who he has to lend money for which rate and whatever. So a country can operate without banks. And if a catastrophe happens, how is our current banking system? Will we get a global meltdown? Or are they also thinking about their own resilience and their position in society?
Oh, to answer the last question, absolutely. That's most of the work that I do. It's banks thinking and financial services companies thinking about their resilience towards physical and transitional risks. And then you do it on a variety of horizons. You do it in here and now. You do it over a short horizon into the future, and you do it over a longer horizon. So it's and you do it towards financial risks, and you also do it towards your business model viability. So there's a lot of resilience testing and stress testing going on. And if it's right, the learnings from those points will feed back into a more resilient business model and a more resilient balance sheet. So yes. One thing that you mentioned is really interesting, because we just said Africa is not a country. Banking is not a worldwide phenomenon. So I think banks and especially financial systems are not interlinked at all.
Okay.
Not strongly. So yes, you have a couple of bigger companies who have a global presence.
Like Vanguard and BlackRock, or are they?
Yeah, true, but also very heavily invested in the S&P. So it's also But for your local bank, you said I have this nostalgic way of that it was really diversified. Banks used to be 100% non-diversified. So you had the local bank in a certain village or city, run by a family, focused on the farmers in the neighborhood. And if you ever come to, for example, ABN AMRO in their head offices, if you walk inside the lobby, you go to the right. They're all the small. There are placards, so they're of all the banks that are part of ABN AMRO.
They had bought up
Hundreds. So they took over. So ABN AMRO is the result of 100 years of mergers and acquisitions, because all those individual banks had no viability and they were so concentrated. So you had Kingmas Bank, you had the Leen Bank, you had the Utrechtse West Utrecht Bank, you had they were all like really small, couldn't stand the test of time anymore, and at some point they kind of had to go forward into a bigger entity. In the Netherlands, I think the only two banks that have a truly, the one bank that has a really truly global presence is ING. Rabobank, somewhat, but less. ABN AMRO used to have it, but is a shadow of what it used to be. The Volksbank Zero. And then in the Netherlands, we still have pretty big banks, actually. If you go to Germany, you have all the Hypovereinsbanken. They are local banks, like they used to be 100 years ago in the Netherlands. If you go to Spain, or you have all the Caixas, they're local banks. I've done some work for a bank in Portugal, which has 6 offices, like front stores, where you can walk in and you do your business, all around one city. So it has a balance sheet of 45 million euros. It's almost a person. Like a very wealthy person, but it's a really
wealthy person.
It's a wealthy person, but there are wealthy people in the world.
Yeah.
And they have 20 people personnel. That's the kind of banks that you still have in Southern Europe as well.
But they tend to survive. Then the questions arise: why didn't that work in the Netherlands and in those countries still?
That's a really difficult question. I think it's part culturally.
Yeah.
And they survive, but they also can't really innovate. So they are still pretty.
But does a bank need to innovate?
It depends on your supervisory regime. So if you say, because it sounds really fun and nostalgic, but if a bank in the Netherlands in the 1920s, if a family went bankrupt, a banking family, everybody lost everything.
Yeah.
So there was no supervision whatsoever. Somebody from the Dutch central bank might come every once in a while and then smoke a cigar and then go back again. There was no. So you also don't want that. So if it sounds, those who, it's also a survivor bias. Maybe that's what I try to say. Like all the smaller banks that are still existing, but there have been many, many, many bankruptcies in the past, and also corruption. Also people who just took the money and ran. It was a bit of a Wild West, I think, at some point in time as well. I'm not an expert on this, but I think in general for it has been for the better, and it should be. And now the rest of Europe, certain countries are also. This is one of the biggest topics of the European Central Bank, right? So the European Central Bank has said, I don't know the specific number, but I think somebody from one of the governors of the European Central Bank said that Europe should actually have 2 banks. Because there is no market for more. Because of the level, the cost of compliance, the level of digitalization, And they are biased by the way, because they'd rather have 4 or 5 really big banks to oversee than hundreds and hundreds of small ones. So that's also a mechanism. But on the other hand, there is no bank in the Netherlands that can play a meaningful role in the transition to that is needed for climate change, because they don't have the balance sheet for it. So
do others have that?
Because they're bigger. So maybe Deutsche, maybe Santander.
Yeah.
They are the kinds of banks, UBS, especially now that they've had this shotgun marriage with Credit Suisse. These are the banks that can invest, for example, bail out Angola to become a net zero country. There is so you need those big financial systems as well.
Interesting.
To create the new, not the strand, to absorb the stranded assets and then create and finance the new assets. You need scale, and it sounds like
but that's for the big industry.
Yeah, or the small industry at volume. So if you're all the small farmers in Germany,
okay.
if you add them all up together, there is no Hypovereinsbank in Germany that can finance that. So you need a behemoth of a bank to absorb the stranded assets and then finance the transition without the actual return on investment in the first 1.
Yeah, the value
2,
of debt,
3.
finance the value of debt.
Yeah. So the ECB says, and it's also a bit of in their own interest, it says if we want to meaningfully change towards a new society in the next 30, 50 years, we need a banking system that is big enough to absorb the risk and to create the opportunities. And that means that we need to have bigger players.
Interesting, because from a regenerative, we're talking about agriculture, for instance, there are, but it's more family offices who are willing to invest in a farm and are in there for the long run, but that is not the volume.
That's not the volume that you need. If you say, I want to create, in the next 20, 30 years, Bavaria should go from this industry to that industry, or if you say the car industry in Germany is dead.
You're going to take 100 companies with you instead of 2 or 3.
Yeah. If you say the car industry in Germany is gone, stranded assets in the next 20, 30 years, we'll have to write down all the assets. We have to create a new economy in Germany, in that region, because otherwise everybody is unemployed. You need enormous amounts of credit.
It's like the Marshall Plan. And then,
exactly.
And then have the interest, the what do you call it, the down, what do you call it, leaning.
Loan.
Yeah, that's, you pay off your loan for a longer period of time.
Yeah, true.
And then you can pay back.
Yeah. Or so it's either you have a big banking industry that's able to absorb that, or you have a government-run Marshall Plan 2.0,
which is also banking driven.
Which is also banking driven.
Thank you, Henk Jelle.
Thank you, Alexander. It was my pleasure.
I'm pleased you took time to listen to the whole episode. Why not consider joining my Patreon to support me in creating more of these conversations? Or even rate my podcast in your favorite podcast app. Thank you again for listening, and join me next time.